Another scratch trade that I want to discuss with you is Samvardhana Motherson International Limited. So let us see why I was considering this stock. I bought the stock on this day, 23rd September, and I promptly sold it on the same day because I did not get volume action, nor did I get price action. But first, let us discuss the setup and the reasons why I got involved in the stock in the first place. So, first thing is the blue line, the 50-day simple moving average, is above the 150-day, which is the green line, and the 150-day is above the 200-day simple moving average, which is the red line. So, this is a nice, strong stage 2 uptrending stock. Number one. Let me hide these moving averages. Next, you see there is a nice base formation here. And this is what I saw. Just before I bought, this is what I saw. You see tight consolidation, nice base formation here. If I convert this to a bar chart, see tight price action, three candle closes in the green zone. Green zone is the first quarter of the base. As you can see, I have divided the base into three parts. The first quarter, which is the green zone, the second quarter, which is the blue zone, and then the lower half, which is the red zone. I want my buy point to be in the green zone, which is the first quarter. And as you can see, 208.60, the yellow line, that is the high of this candle. I have marked that as the buy point. So I was expecting the price to go above this yellow line on high volume. So if I have to draw the contractions in the base, you see this is 1, 2, 3, and 4. I need minimum 4 points in the base, which means two corrections or two contractions in the base, which is exactly what I have. Moreover, inside the base, I want majority of the volume bars to be below the average volume. You see this blue line, this is the 50-day simple moving average of volume. See, inside the base, majority of the volume bars are below the blue line, which is a good sign. Okay. So these were the reasons I was interested in the base. So technically, chart wise, the stock looks strong. Okay. Now let's look at the ratings and things like that. So this is the MarketSmith page. Let me expand this. So if I come down, I click on consolidated. Okay. See triple digit growth in quarterly earnings. Okay. The earnings have been growing very fast in the past few quarters. Even sales, if you see 27, 20, 29%. So earnings growth is strong. Sales growth is strong on a quarterly basis, at least in the latest 3 quarters. The return on equity is not great. It should be 17%. Here it is 10%. Master score is excellent. This should be minimum 60. Master score is a score given by MarketSmith to a particular stock based on its technical and fundamental factors. EPS rating and price strength both are above 80, which is very good. Accumulation distribution rating is A, which means the stock has got institutional demand. Group rank is poor, 56. Okay, we want group rank to be 40 or less than 40. We also have to see whether the group rank has been increasing or decreasing over the past 6 months. Okay, and we'll see that. 2017, 2.27 is the earnings per share. 2024, it's 4.01. So it's not, I wouldn't say it has doubled, but it has increased significantly. Okay, multiple percentages. So that's another good sign. What about sales? So if you see total revenue from total operating revenues, if we look at this, let's see, 10 years ago it was 30,000. Now it is 98. So sales have tripled. Okay. So the sales have grown on an annual basis. The earnings per share has grown. Quarterly earnings showing growth. Quarterly sales showing growth. Return on equity is not up to the mark. What about margins? Let's look at margins. After tax margin, see, 10 years ago, 3.60, now it is 2.81. So the margin has shrunk. So there is a problem with margins and there is a problem with return on equity. Otherwise, the sales and earnings seems to be doing well. Okay. And technically, if you see nice base formation, no problem. Even the relative strength line doesn't seem to be declining. So it's a good sign. Overall, the stock looks good. Now let's look at the industry. It's a part of premium feature. Let's see whether we can, let's see if I can log in. Let's say Motherson. Let me click here. No, maybe there is some website maintenance going on, so it's not allowing me to log in as of now. But as far as I can remember, before I bought the stock, this group rank was declining. So 6 months ago, the group rank was good, but now the group rank is not that great. So the group rank was declining, which is not a good sign. Okay. So it's a mixed bag. If you see this, technically it looks strong. Fundamentally, couple of factors are in our favor, couple of factors are not in our favor. The industry rank is not in our favor. So it's like a mixed bag. So I decided to take the trade. On this day, I decided to take the trade. And I decided that since there are some factors which are not in my favor, I would be a bit cautious. If the stock doesn't give me immediate price and volume action, I would be out of the stock. That is why I call this a scratch trade. So let's go to this day, 15-minute chart. So 23rd September. Let's go to 23 September. Yeah. So this is the first candle of the day. As you can see, high volume, price went up. So this is a good sign that the stock is attempting to break out of that 208.60 level. Then second candle, again, another high volume candle. Okay. But if you see long upper shadow, so I took while the price broke above that yellow line, I took a 5% position size here and the price started to go up. I thought, yes, volume is coming, price is coming. However, towards the end of this 15-minute candle, I immediately started cutting my position. So the moment the price touched 208.60, well, my alert was already at 207. So by the time it hit 207, I already knew that I need to buy the stock. But I did not buy it until it started trading at least one tick above 208.60. So 208.65 is the real price. Okay, where I started to put my market order. So I bought somewhere here. Price started to go up, then it immediately began to fall, and I immediately began to cut back because uh, if you read Jesse Livermore's book, How to Trade in Stocks, what he says is no matter how technically or fundamentally strong a stock is, if the price action itself does not support your opinion, you should be out of the stock. In this case, I took a position, a 5% position, thinking that the price would go up. But suddenly, within those 15 minutes, if the price begins to come down like this, that is not a good sign. Usually, the best stocks are the ones that once they cross your yellow line and you put your market order, once you get the position, they never come back to your buy price or they never come back to your yellow line. They continue to go up. You get good follow through on the 15-minute chart, on the 30-minute chart, on the 1 hour chart, even on the daily chart. Okay. Sometimes even on the weekly chart, you will get good follow through. So the stock never comes back. Those are the stocks that we should hang on to. With those are the stocks which we should keep in our portfolio, and these are the kind of stocks which we should get rid of from our portfolio immediately as it starts showing signs of weakness. This big upper shadow is a sign of weakness. So this is called as a scratch trade. Scratch trade means I take a position, that full 5% position which I want to get into, but I am watching the stock. I want to see what happens in the next 15 minutes, half an hour, 1 hour, maybe 2 hours, maybe towards the end of the day. Does the stock hold above the yellow line? Okay. Does volume keep coming in, or just the volume just subside? Okay. The volume is a clear indication of whether the institutions are buying the stock or not. Look what happened later. The volume remained below this blue line, even on the 15-minute chart. Imagine if a stock does not give you follow through on a 15-minute chart, how can it give you follow through on the half an hour, on the 1 hourly, on the daily time frame chart? So I got out almost at break even. I must have lost maybe 0.01 or 0.02% here, but I immediately started cutting my position. This is called as a scratch trade, where I don't allow the price to fall below my break even point or below my buying price, because I don't want to take unnecessary risk. Because the yellow line that I have drawn, it's nothing but my opinion about a stock. It's not written in stone that once the price crosses the yellow line, it is going to go up. No, it doesn't work that way. I have to respect market opinion. Great traders and investors like Rakesh Jhunjhunwala have said that markets are supreme. So you have to listen to the market. If the market is not validating your opinion, you have no business being in the stock. Okay. So I immediately cut my position. I was out of the stock. Now look what happens. I took the stock away from my radar. That was a mistake. See, it consolidates for 2 days and then it picks up, crosses the yellow line, and now for the next 2 days, it has been holding strong above that yellow line. So almost 3 days, it has been holding strong above the yellow line. So the pattern, the stage two uptrend has not been broken. The pattern has not been broken. The base has not been invalidated. Okay, the only thing that failed was the buy price. And the mistake that I made is I took my eyes off this chart. If I had not taken my eyes off this chart, and if I had again re-entered here, see, on high volume, price went up. Okay, I could have got an entry into the stock on 26th of September, but I did not do that. My attention, my concentration was on some other stocks. This was never on my watch list. That is a big mistake. Okay, that is my mistake. I accept that. I should not have done it, because I have done all the analysis on this stock. Okay, only one or two factors are here and there in this stock. Rest everything looks okay. Possibly if things improve in this stock, I could have held on to this stock for a longer period of time. But due to my lack of concentration, okay, or casualness about this stock, I missed this particular rally. Now the stock could even double from here. I don't know, but I missed. And once I miss a stock, I don't want to chase the stock. Okay, I could still buy it. It's not very far away from the yellow line. But no, once I miss a stock, I missed the stock. I was not concentrating. I don't want to chase a stock. Okay. So I hope you got to learn from this video. I hope you looked at the factors that I'm looking at before I'm entering or exiting a particular stock. I hope this will help you in your improving in your trading performance. Okay. So please don't forget to support this YouTube channel. Please don't forget to like, comment, and share this video so that other people who want to become professional traders, professional stock traders just like you, they also get access to this kind of information and analysis, which is very helpful. It has taken me years to learn this, and I'm sharing this with you. So please support this channel. Let this video reach those people who genuinely want to become professional stock market traders. Thank you so much.